Hey guys, hope you all are doing well with your studies. In this particular video, we are generally going to talk about MCQs based on foreign trade or international trade. Okay, so in our previous video, we generally talk about the theoretical portion of international trade. So we talk about the basic imports and exports, import-export data, balance of payment, balance of trade, or we talk about the basic differences between FDI and FIIs. Now time for practice. So in this video, we will discuss number of questions based on foreign trade. Okay, so if you are new to my channel, please do subscribe, and if you like the video, please do share with your friends as well. So we will start with first question on your screen. So first question is the new economic reforms with LPG model, that is liberalization, privatization and globalization, was passed in which of the following years? New economic reforms is one of the major reforms in Indian economy, and that time in 1990s. So we are facing Indian economy facing so many issues. That time we have only 1 billion US dollar of reserve. So after that, Manmohan Singh was the finance minister and Rao was the prime minister that time. So they open up Indian economy with new economic reforms. So this was passed in which year? So what will be a correct answer? 1991. So option A is the correct answer for this one. And believe me guys, whenever you study the economic reforms in India, so this is one of the most important reforms which is done in 1991. Okay, so 1991-92 was the new economic reforms era, which is known as, and government of India, they generally liberalize rules regulations regarding the business guidelines in India. They give license to private entities and they open up our economy. They start doing import or exports toward the other nations. Okay, so this model was known as LPG model, and the policy was called new economic reform, and it was passed in 1991. Next question: does account monitor the flow of funds from goods and services or import and export between countries? So this question is related to balance of payment. So if you further study balance of payment, we have three account. One is capital account, another one is current account, and the last one is financial account. Okay, so what will be a correct answer for this particular question? Current account. So current account, which is which basically maintain the overall import export data of our economy. Okay, so current account that generally deals with goods and services, or the import and exports of goods and services. If you talk about the balance of payment, as I told you, it is an account which basically monitor all the monetary transactions done by Indians with other country or with the rest of the world. Okay, so current account which deal with goods and services, and capital account which deals with a flow of short term and long term investment and capital. Okay, next one, which country is the largest trading partner of India? So this question is quite tricky, so you need to read current affairs on regular basis. Okay, sometime you will find China on top, but if you see the latest data report released by Ministry of Commerce in October 2022, so as per this particular data, USA, United States America, is one of the largest trading partner of India. So trading partner is like if you see the import partner, so US, they generally make maximum import, or if you see the import partners from like from where India imports, so China is one of the largest, and export partner US is one of the largest. But if you combine the import export data, so right now USA is one of the largest trading partner in India, followed by China, then UAE, UK and other countries. But as I mentioned, this is US and China, they have very close data. Okay, so most of time this data is variable, so you need to update through current affairs, right? Next question: a country's balance of payment (BOP) is vital for following reason. So why balance of payment is important for any country? So these are the statement, you have to find out the right one. So balance of payment reveals its financial and economic status. So which is a correct statement. So balance of payment is basically the all monetary transactions are done by India with the rest of the world. So how we are dealing with other countries, okay, how our imports are doing, how our exports are doing. So if you have import at greater side, which means there is a problem in the fundamental of that particular economy, because you will be part of deficit in that particular case. Okay, so it is, we can say statement 1 is correct. Balance of payment can be used as an indicator to determine whether the country's currency value is appreciating or depreciating. Okay, so when you import things, whenever you import, which means your account will be debited, and whenever you export, your account will be credited. Okay, so with this, like if you have less import and greater export, which means there will be demand for your domestic currency, that will lead, that will provide a strength to your domestic currency. Vice versa as well, if there is a more import, as you can see in case of India. So we have if you see the import export data, so we have more import. Okay, so that will definitely, like, that means you are making more payment toward the outside, so your account will be debited, so it will eventually affect your domestic currency's value. Okay, so balance of payment statement help the government to decide fiscal and trade policies with other countries. Okay, so on the basis of balance of payment, let's say if we are doing a maximum import from China, so whenever we'll make any bilateral deal with China or any trade deal with China, so we will present that data. If we are importing these things from your country, so you have to import these things from our country. So to decide the foreign trade policy or even government of India's fiscal policy, so you have this balance of payment, we use balance of payment data, and accordingly we decide the guidelines for the other country, or even we can say we decide our foreign trade policy, right? So option D will be correct answer for this one. All statement are correct. Next one, dash is an investment fund that is based in a country other than one where the investment is made. So this is generally known as foreign direct investment. Okay, so what will be your correct answer? Or we can say foreign institutional investments or foreign direct investment. Okay, so in this one, what will be your correct answer? Option A will be correct answer, foreign institutional investment. Okay, if we have like it may be called FII as well as FDI, but if they mention if we are doing this investment or if this foreigner doing investment in Indian economy in productive capacities, so that will be known as foreign direct investment. But here they mention ki if any foreigner is investing in our economy, so what it is called, and you do not have an option of FDI, so what will be your correct answer? FII. So FDI, the difference between FDI and FIIs is very simple. FDI, basically these both the terms are related to foreign investors. So when they invest in productive capacities like land, labor, capital, and other things, so when they came India and they make a setup and they run business, so that is direct ownership, or they have direct ownership about the price determination, decision making, and all. Okay, so that is part of FDI. FIIs, they invest in share market, bond market, mutual funds. They do not have direct ownership, but they have ownership, which is called indirect ownership. If the company, let's say if any FII is invested in TCS shares, so if that particular company is doing well, so his share price will also goes up. Okay, so FDI and FIIs, we discussed these particular thing in detail. I hope you guys remember. Next one, N dash is a financial investment made by a company or individual in other countries' business interest. So business interest means basically they are investing in the productive capacities, so it will known as foreign direct investment. Okay, I hope now this differences or the cases are clear to each and everyone. Next one, FDI in India allow by two mode. One is government route and another one is, so modes of FDI we already discussed in our video. So foreign direct investment are basically done through two major route. One is government approval, where we need a prior approval of government of India. But there are some businesses where you do not need the approval of government of India and RBI. So because we already passed that particular bill in our parliament. Okay, so that route is generally known as automatic route. Okay, so option A will be correct answer for this particular question. Hope you guys remember this one. So automatic route is where like we already passed that particular bill in government in India's parliament. Okay, and we do not need any further approval for these kind of investment. Next one, when payment of foreign exchange are more than a receipt, then balance of payment is called. So now you can, I hope you remember, import. So they are mentioning when payment of foreign exchange is more, which means your import is greater than your export, right? So import means your account will be debited, and export means your account will be credited. So debit entries are more, so it is generally known as deficit. Okay, so what it is called? Deficit. So what will be your correct answer? Option B will be right answer for this particular question. Okay, next question, guys. Balance of trade is so it is the monetary value of all transaction done by Indian country, rest of the world. Okay, so difference between import export, total of import and export of services, difference between import and export of goods, total of import and exports. Okay, so it will be difference between difference between export and import of goods is generally known as balance of trade. There is a mistake actually, it is not BOP, it is BOT. So balance of trade, so whenever we talk about the difference between BOT and BOP, please do remember this one, balance of payment. So balance of payment is the overall monetary transaction done by Indian economy or Indians with rest of the world. It can be in the term of import export or services or any other thing, investment and all. But whenever you talk about balance of trade, so it is import and exports of goods only. So it is import and exports of goods only, not services. Okay, so like if you see the balance of trade between India and China, so we will take an account only on about goods. Okay, so balance of trade is about goods, import export, but balance of payment is overall monetary transaction done by Indians with rest of the world. It can be in the form of goods, services, or other investment and all. Okay, so you can say balance of trade is a narrower term as compared to balance of payment, or you can say balance of trade is part of balance of payment. Okay, so I hope this difference is also clear to each and everyone. Next one, what is devaluation of currency? So we already discussed this particular thing in detail as well. So devaluation and revaluation. So devaluation is increase in the value, decrease in the value of currency, that is devaluation, and revaluation is increase in value of currency. Okay, so devaluation is when government of India or any central government, they intentionally decrease the value of domestic currency in term of US dollar. Okay, let's say I'll give you an example. Let's say for $1 the current rate is 82 rupees. Tomorrow government of India, they take some step and they did it 85 rupees. So here government of India intentionally decreasing the value of our currency. From previously you have to pay 82 rupees for $1, now you have to pay 85 rupees per dollar. So the reason behind this devaluation is to increase the exports. There will be no effect on internal prices. Okay, so what will be a correct answer? Fall in the value of domestic currency in relation to foreign currency is planned by central bank or central government. So option B will be correct answer for this particular question. Okay, so this is like if you see the first statement, when the value of domestic currency decrease in relation to value of foreign currency, that is decided by the market condition. Like let's say on the basis of demand and supply, the value of Indian currency after some time become 83. So this is the first case. This is, we cannot control, this is totally depend on the economic conditions or the economic performance of India as well as US. Okay, but here government intentionally decreasing the value of our currency, that is known as devaluation. Okay, so hope this is clear to all of you. Next one, India's all economic transaction with the outside world is in a year is known as. So this is very simple one. So what will be a correct answer? They mention all economic, not only goods. Okay, so it is called balance of payment. So BOP, it is known as balance of payment. Okay, so balance of payment is a, like, it's an account which generally consider all monetary transaction done by Indians with the rest of the world during a financial year or during a given time duration. Okay, it include capital or services or goods. So everything is generally part of this one. Okay, next one. Which of the following is part of capital account? So current account that generally deal with goods and services only, only goods and services. Capital is deal with investment. Okay, so it can be investment done by private entities, banking, or official means government involvement. Okay, so what will be your correct answer? All of the above will be right answer for this particular question. So D is the correct answer in this particular case. How often does the RBI publish a report on the management of forex, foreign exchange reserve? Okay, so RBI is generally known as custodian of foreign exchange. So the all the foreign exchange reserve are held with RBI. Okay, RBI that generally manage that particular reserve. Okay, and the report about this particular reserve is published by RBI in every 6 month or half yearly basis. So option C will be correct answer for this particular one. Next one, where the exchange foreign exchange reserve held in India. So I already answered this particular question. So what will be a correct answer? The Reserve Bank of India. So it is the duty of central government, central bank to manage the reserve of any economy. So in India we have RBI that generally work as a central bank. Okay, so the things are, that's why RBI is generally known as a custodian to forex or foreign exchange as well. Okay, next one, invisible export means. So invisible, so we have two type of export, visible and invisible. Visible export of goods, invisible export of services. Okay, so if we are exporting IT services, banking services, so that is part of your invisible export. So option A will be correct answer for this one. Next one, dash means selling the product at a price less than ongoing price in international market. So sometime especially China use this particular term to penetrate the market prices, or even this is also known as in marketing lingo it is known as price penetration. So in economics it is generally known as dumping. Okay, so what will be a correct answer? Dumping is basically it's a strategy adopted by economies where they generally sell products in international market at a lower price as compared to domestic. Let's say if in India this is manufactured by some Indian company, and in India we are selling it in 100 rupees. In foreign countries we are selling it in 70 rupees. So like if we are selling at a lower price, there will be more demand, so we can increase our productivity. So that is called dumping. Quota is something related to your like some specific goods with lower price. Tariff is duties, kind of taxes. Okay, subsidy is discount, and dumping is it's an economic strategy adopted by economies. Okay, next one, market in which currencies buy and sell and their prices are settled is called. So this is very simple one. Okay, I already did a video on forex market. Okay, so it is called forex market, foreign exchange market. So foreign exchange market is the market basically where we trade in foreign currencies or currency pair. Okay, so like let's say if you have to convert your domestic currency in some foreign currency, so that trade is generally happen in forex market or foreign exchange market. Okay, next one, a trade policy consists. So whenever we design our trade policy, it is a part of import export things. Okay, so what will be a correct answer? It is part of import export policy. So when government of India they frame their trade policy, which means they are framing policy for India's import as well as export. Next one, FERA, Foreign Exchange Regulation Act, it was in India has been replaced by, so previously for the foreign exchange business we have this FERA, now it is converted into FEMA, Foreign Exchange Management Act 1999. Previously it was 74. Okay, so Foreign Exchange Management Act 1999, and it was become effective from 2000. So FEMA came into force from June 2000, and it succeeded to FERA, Foreign Exchange Regulation Act. So we changed this R regulation with Management Act. Okay, and the forex business in India that generally work according to the FEMA guidelines, Foreign Exchange Management Act. Next one, many a time we hear about the SEZ in newspaper magazine. So SEZ stand for these are a special economic zone. So option A will be correct answer. Very simple question. So special economic zone. So these are the business areas where we basically make some setup. We make a setup as per the industrial requirement, as per the industry's process, and even in these particular areas we provide some benefit to the manufacturer, like the subsidy in rent or electricity and other benefit as well. Okay, so that is generally known as SEZ or special economic zone, like Kandla, or even we have number of special economic zone right now. So guys, I did a similar video on monetary policy as well as Indian banking system or Indian banking structure. I did a video on inflation or economic planning in India. So question based. So you can watch these particular videos as well, and believe me, these videos or these questions are definitely going to help you in your upcoming examination. And I did a theoretical portion as well. So theory as well as MCQ. So first I generally publish a theory video, and then I come with this practice question or MCQ session. Okay, so first go for the theory portion, you make your understanding toward the subject, and then go for this MCQ part. And if you like the video, please do share with your friends, and if you are new to my channel, please do subscribe and do share with your friends. So if we'll have more numbers, it will give motivation. Okay, so thank you for watching this video guys. Have a nice day. Thank you. I'll come with a new video very soon. Thank you.